We're going to start with Merger Monday because it is, once again, Merger Monday. In this case, Ultimate Software. Great name. Being acquired by a private investment firm for $11 billion. This is an all-cash deal. Shares of Ultimate Software up 20%. Good day for the shareholders. And this is one that I don't think we've ever talked about. Like, what does this company do besides have a great name? Because this is one that you and your colleagues in MFAM Funds have known about and I believe invested in for a while now.
Yeah, it's a happy Monday for shareholders of Ultimate. Two of our funds have been long-term shareholders of it, thanks to Tony Arsta. Let's give credit where credit's due for his work on this company going back to at least 2014, probably earlier. And it is a payroll and human resources management company, which is geared toward sort of middle-sized companies. And it has had a great run. Of course, the employment numbers, not just recently, but for going on 7-8 years now, have just been very good. And so they've got more and more work to do. They're competing with companies, better known company, it would be Paychex in the space. But I think they have been giving up market share to not only Ultimate, but some of the smaller players. And the 20% premium that is on Ultimate's price today is there are other companies like Paycom and Paylocity, which are two other very similar companies, but smaller, which are going up in sympathy as people think, well, if I can't get Ultimate anymore, maybe the things that are out there and might be acquired. So you've got those companies being up 5% today.
So why do you think they agreed to be acquired? Because if, as you said, they've been doing a decent job of taking market share from Paychex. And just to put some numbers around this, Paychex, about a $25 billion company. With this buyout, obviously, Ultimate Software being valued at around $11 billion. So it's not like they were dramatically smaller than Paychex. And if they were gaining on them, I'm curious if they always saw this as the logical conclusion that, hey, at some point we're going to, if the price is right, we're going to agree to be bought out. Because I'm sure there are at least a few shareholders who are looking at this saying, no, even with the 20% premium, this was a train that was running well and I wanted to keep riding it.
I'm sure there were. It's a founder, CEO company. He's still there. He's been there and for, I want to say, 20-some years. And so I think one of the things specifically about this company that it points to, and with some pride, is its the company culture and how they have ranked in some Forbes rankings of most beloved companies. I think they were in the top 10 a couple of times. And so in terms of, employee happiness and admirability. And I think that they have pointed in their press release to this being a way to maintain the company culture. And so if and now I'm going to speculate, if the founder wanted, some sort of payday that he could realize through this and yet maintain the company and the culture that he loved, and he's found a buyer that's willing to do that in a way that he didn't think could necessarily be done in the public markets, maybe that's a rationale, but that's speculation.